Hey, what's up, good people? How you doing? As you can see, I got my man Stocks with Josh. He has a tan. And then my man Keenan Grace, he got out of the oven too early. Hey, you guys, we just having fun. We here at Invest Fest. This is so important. This is probably going to be one of the best videos on stop losses. Number one, most people overcomplicate the processes of stop losses. Number two, one size does not fit all. And so that's why a lot of people don't talk about it. If Josh buys Apple at $10 and I bought it at $20 and it's $21, then my stop loss and his stop loss is totally different, because his stop loss could be in profit and mine could be just above profit. Follow? So what I'm going to tell you about stop losses, and I want these guys to join in based on their own experiences, all right? So I'm not going to speak for them, I'm going to speak for myself. Here's what I do for a stop loss. If I get into a play, and you guys could jump in, if I get into a play, the first thing I do is I look at how the stock vacillates. For instance, if you're getting into a stock that you think in 45 days is going to go up 30%, right? But it's fluctuating 10% weekly, then you do not set a 10% stop loss on your play, because it's going, I'm talking about a longer term investment, because it's going to trigger your stop losses, and then you're going to keep stopping out, and then you're going to continue to lose money, right? So if it's a play and I think it's going up 30%, but it's vacillating 10% moves, let's say 5% moves, then I'm not going to set my stop loss at 5%. I'm going to set it at 10%. If there's a 10% vacillation and I think it's going to go up to 30%, then don't set your stop loss to 10%. Now, I'm not talking about the day you buy into a swing trade and you don't know what's going to happen. You set your stop losses tighter on stuff like this. I'm just talking about a long term. If I get into 10% profit on a stock, let's say I get in a stock Monday and Tuesday I'm up 10%, then don't just leave your stop loss there. Move your stop loss to where you're up 5% in profit, right?
Right.
If that same stock goes up 30%, then move your stop loss up to 25%. If you think it's on a steady incline, follow? Because your stop loss is protecting you. Then at that rate, and that's not every stock, you got to look at each individual stock. Just think about a stock as personalities. They all have their own separate personalities. And so on plays like that where I have a lot of money in, I increase my stop loss as I get into profit, because if it triggers, then it only sold in profit. What you got to say, Keenan?
So let's start it from the top. A stop loss is a sell order. There are two primary kinds of orders. You can buy, you can do a buy order, you can sell, you can do a sell order. You can buy it now, you can sell it now. But the stop loss is sort of a conditional order to sell. Under this condition, I want this to sell automatically so I don't have to babysit it too much.
Right.
How many of us have been in stocks and they ran all the way up and then you still ended up losing?
Yep.
Because you didn't set your stop loss, and even better, you didn't move it to make sure you got out in profit. So when you go and buy a stock, easy. And then you're up in it, you're like, do I sell it now or is it likely to keep going? Just to guarantee, and I'm gonna give you a prime example. They say the trend is your friend.
Right.
And let's just picture an easy trend. Let's say that we're looking at a stock, whatever it is, it's trading between $100 and $110. You see that 110? Oh yeah, it's coming back down to 100. You see that 100? Oh yeah, it's going back up to 110. If I got in that stock at 100 and I expect it to go to 110, what I would do is this. As soon as I bought it, I put a stop loss on maybe 98, maybe 95. Because what if it goes in the wrong direction? I don't want it to go down to zero after it broke the trend that I was looking at. Because the only reason I got in was I was trying to play it from 110 or 100 to 110. Mm-hmm. What if my trend broke and then the market is crashing down because of the Fed or anything? Right. It would let me out of it. But let's say this. Let's say I get in at 100, my stop loss is at 95 or something like that, and then it's going up. The stock is going up to 110. I'm getting ready to take profit, but what if it happens to go to 112? What if it happens to go to 113? Now, that stop loss that I have in my order book. So you go look at your order once you make the stop loss. And I'm going to modify that from 95 where I had it before, and now I'm going to put it maybe at 105. So it can guarantee that if it came down under the condition that it dropped back down to 105, it would kick me out at 105, but I paid 100, so I'm up. But what if it keeps going? What if it goes to 110, 120, 130? Oh yeah, it's time to go back into my order book and then move my stop loss to maybe 120 because the stock ran up to 130. I'm guaranteeing a win here,
Yes.
right? And that's how you use the stop loss appropriately,
Right.
so that when you're up in these plays, you don't lose and you don't have to babysit them as much.
Right. And understand that stop losses should be set before closing bell. All right? Stop losses should be set. So in options, sometimes you'll get in an option play and you're up 30, and then you see it going up 40, and you can see it going up 50. Well, I know a lot of you guys are at work. You incrementally move your stop losses up. There's been times where I've been up in a day 200%.
Yep.
So now I got my stop loss at 195%. I'm just using round numbers, right? So now if my stop loss is at 195%, and that stock is finna hit 200%, now if it turns around and falls and triggers, I still win.
Right.
I'm up 195%. But as you guys know that have taken the class with options, it could turn around and you can lose that 200% or that 195%, and you can be negative all of your money simply because you did not set a stop loss. That's why I say setting stop losses on options is different than setting stop losses on long-term trades. There are differences in these plays. Talk about it, Josh.
All right, well, we're talking about loss initially. So most people do not like stop losses. When I talk about stop losses on my channel, Larry, I would say 50% of the people say that they don't use them and they're not going to use them. And they say the one reason, every time I use a stop loss, I lose money.
Yeah.
Then I re-enter the trade, I put a stop loss in, I lose more money. But here is the point that's being missed.
Yeah.
The trend is clearly going down. Okay.
Yes.
And so if they were using that discipline, they would just wait until the trend is going up.
Yes.
Guys, so the stop loss, I'm gonna tell you right now, until you learn to accept and protect your capital, I don't personally believe that anybody can come on and be a pro trader,
Right.
or even a successful investor,
Profitable trader.
Yes.
a profitable trader without using a stop loss. Now I'm going to throw an extra layer of thought into this, okay?
Mm-hmm.
Larry mentioned earlier a little bit about the idea of time frames, because
Right.
that comes into play when you're talking about time, stop losses.
Yes.
If you're having a very long investment trade, you're going to have a very low stop loss. You would still put one in because let's say...
Explain what's a very low. I can hear the people saying, what's a very low
good
stop
question.
loss? Get
So
useful
let's just
now.
say that you bought some Nvidia because you believe that it's going to do well over the next 5 years. The stock's going to double and it's going to split, which probably will happen.
Yep.
But right now it's been trading up as high as $500. Okay, you get into Nvidia, right? Now I actually think the lowest that Nvidia could go, it could pull back to $364.
Right.
Okay, but if it were to pull back below $364, maybe $350, something has happened.
Right.
Okay,
That changed the whole
that
narrative.
changed the whole
It's a fall of
narrative,
life now.
right?
Yep.
But you want to maybe DCA from where it's at
Right.
all the way to that pullback,
Right.
right? So you have a very low stop loss. So you're allowing more of your capital to be at risk because you are doing a longer time frame.
Yes.
Right, and you're actually DCAing in that window.
Yes.
And if you're doing that, then you need to be excited about buying the dip.
Right. So-
Because you didn't lump sum buy.
Let me say this. Ticker symbol HE, Hawaiian Electric. I had some that printed today that I had a put option to $10, right? I will tell you that I didn't have a stop loss on that because it was so volatile. But we knew that, just like Josh and I discussed on the side of this video, there was going to be lawsuits. And what the state, or what was that? The county or something of Hawaii sued them today, and what? It fell below 10, right? So on that play, because my expiration date was set so far out until September, I didn't have a stop loss on that. So yeah, every day I was losing money. I was losing money because the options, it went up to what, $12, $13? So I was losing money, right? But I had my expiration date, I believe, to September 1st. So today, when it went down, my option went up. So there are only a few times where I don't have a stop loss set, and that's because we were expecting it to go down and down even lower, probably even down to the $4 range. So that's why every stop loss is not different. It's
So
not the same.
I want to make this.
Yeah.
So what I was saying earlier, Larry, was
Yes.
that if you're a long-term investor in Nvidia, you're actually happy that it's coming down because you get to buy more of it at a better and better
Better
price.
price.
However, if you have a short time frame
Yep.
and you don't intend to do any DCA, and you're intending to lump sum, and you're hoping for the best.
Right.
Okay. In that scenario, you have to use a stop loss. And you say, but Josh, I tried and I kept getting stopped out. All I
Right.
did was lose money. But here's where the problem lies.
Yeah.
You're probably not using any technicals.
None.
Okay.
You're trading with your heart.
You're
not
trading with your
chart.
heart, and you're believing someone else's narrative or story or
Right.
their hype or their excitement about a world-changing stock. And there's
Right.
there's exciting stories. But what the most successful use of a stop loss is not a percentage, because people ask me, Josh,
Right.
what percentage do you use?
Right.
10% is it's not an acceptable loss for me.
Yeah.
When I get into Keenan, when I get into Tesla, and I was telling everybody that we had these support ranges at 225 and then at 211,
211,
right?
yeah.
I want to have a stop loss if I really believe I've done my due diligence
Sure, dollar
and my
amount.
support is correct.
On the stop.
I typically am $1 beneath my entry.
Right.
Because I am betting on the due diligence that I did. I'm betting on the hard work of understanding the direction of the stock.
And that's why I talked about entry price. So if someone else got in higher, his stop loss is not going to be the same because he did his due diligence in trying to get in at support
Yep.
at
And
the
the
lower
last
price.
thing I'll say about that is, at the end of the day, if I put the stop loss $1 beneath my support and it breaks through,
The trend is done.
right, then it means that my homework might not have been right.
Right.
So I
And you
accept-
don't rush and get back
Correct.
into the play and
No.
set another stop
I
loss and
accept
lose
the
money
grade.
again.
Right.
Don't do that.
I accept the grade it just gave me.
Yes,
right?
sir.
Take a step back.
Right. Now there's some
I want to chime in on that too. Think of it like this. Imagine that you are in a home. You don't know if you're on the first floor, second floor, or whether you're in the basement. The floor, you see a floor. If you throw a basketball at the floor, it'll bounce up. You're betting that the ball that you pick up in the dark is gonna bounce. You throw it, it bounces, okay, you got it right. But what if you threw a bowling ball and it falls through and you find out that you're on the top floor and this thing is falling through the floors? Oh, you shouldn't keep betting that it's gonna bounce
Right.
because it broke through the support of the
Right.
floor. But usually they bounce. But if they don't bounce, you want to be prepared and say, I'm not betting on this one anymore. I'm just
Right.
gonna let it crash down.
Yes.
And then I'll reconsider.
Yep.
But this is what everyone does. They actually let it bounce once, and then it turns into a bowling ball for whatever reason,
Right.
and then crashes through the floor. But you could have got out in profit if you were paying attention to your stop loss.
Right.
And be mindful of putting stop losses on your long-term holds. There's
Yes.
so many people who told me that they had Nvidia at 170, 180. It came back to like 160, and then they got stopped out, and now it's 500. But they wanted to go long on Nvidia. So what we were saying earlier was, if you're going long, meaning you're betting on it for a long term, you think the company is great, where should your stop loss be? Recession territory, in my opinion. So if there was a recession, where would Nvidia break under? Right? And let's say that was like $100 or something. You're like, yeah, after this, I'll just let it crash down to the floor and then I'll pick it back up then. Right? But make sure that you don't have your stop losses too tight, in my
tight.
opinion. I'm not going to give you financial advice, but not too tight on your long-term holds.
Yes.
And your long-term holds should, and again, my opinion, only be in companies that are profitable.
Yeah. Now let me close by saying this.
I got one more thing.
Sure. Let me get this because
Yeah,
I'm
yeah.
old and I don't want to forget it. So, so you guys know on yesterday's video, I got stumped out of some Apple plays, and some people were confused with that. But I thought you never sell Apple. Yo, listen, I want to be crystal clear. That Apple play that I got into, and I've showed you guys that I was up like 9 to 10%. That was a short-term play. All of my long-term dollar cost average Apple, that portfolio you guys have never seen, because that I've been dollar cost averaging into for years. I got into that play just for this period, and you guys saw me buy some Apple. What else did I buy? I bought some Disney, I bought some Apple, and I got stumped out of those. And somebody said, hey, but you're never supposed to sell Apple. No, there is no stock that you're never supposed to sell. That was not my long-term apple. That was just a swing play. I just got into it in less than a week, but I put, what was it, like 15, 20 grand in it? So that was, but I made 10% off of that, right? But what happened? It tanked. But I was still up 8% when my stop loss triggered. So I didn't lose any money. I moved my stop loss up on those plays, and they all triggered yesterday, like I told you guys, but they all triggered in profit. So don't only set your stop losses beneath your buy price.
Plan to move it.
But plan to move your stop loss up as you're in profit, and use the tools to help you keep your profit to stop your loss. Go ahead,
Okay,
Josh.
well, my final question is going to be the two of you guys.
Yep.
Do you have anybody ever ask you in your comment section, how come you never talk about how much money you lose? Have you ever got that?
All the time.
All the time.
Well, I get that question.
Yes.
And I'm going to tell you that one of the biggest ways that I lose money consistently is through stop losses.
Yep.
Right? And I'm going to tell you that is what I'm going to call an acceptable loss versus an unacceptable loss. Buying a stock that I believe is going to eventually go to the moon and DCing into it, from 2021 till today, we'll throw out some, charge point, whatever you want to, whatever stock comes to mind, Lucid, right?
Yeah.
Buying that and holding it for the
You
last
say
couple,
Lucid?
Lucid. Buying that and holding that and DCAing down all the way
All
into
the
the
way.
ground, I would say that
Mullen.
for me, Mullen, that's an
Go ahead.
unacceptable loss.
Right.
No.
So the stop losses, which aren't super exciting, I get
Right.
stopped out of orders every single day.
Yeah.
Right? Every single day I get stopped out of orders. To me, that's an acceptable loss.
I
and
got a
that's-
whole bit on this, Josh.
Go for it, man.
So, listen, when I trade options
This
on the live
video
stream,
will be
right?
timestamped. Go
Yeah.
ahead.
When I trade on the live streams, right? Sometimes I lose. I win more than I lose, but the reason is because I keep my losses small.
Yes, sir.
So I think of it just like this: cost of operations is what we call it. So
Right.
think of it: if we owned the McDonald's, guess what? We got to pay for the real estate. We got to pay the taxes. We got to pay for the burgers. We got to pay for the ketchup. We got to pay for those cups that you keep refilling. Right? We got to pay for this stuff at McDonald's if we owned it. Oh, that's the cost of operating this business.
Right.
In options and stock trading, investing is a little different,
Mm-hmm.
but in trading, the cost of operations is your stop loss.
Amen.
To
Yeah.
play this game,
Yeah.
it's going to take from you a little bit.
Right.
Just like if you own the McDonald's, you got to go and buy the buns.
Yep.
That's how it works. Cost of operations, that's your stop loss.
And in
Part of the game.
options, sometimes in options I've learned, the way I trade options with my expiration date is generally a run up in the morning, cool off in the afternoon, and then a bounce at the end of the day. So, and I establish these trends, right, in the plays I get. So what I do is I'll buy some in the morning, right at opening bell. There's a run up. Whatever that run up is, sometimes I don't know. Sometimes it's 10%, sometimes 20%, sometimes it's 5%. Sometimes it'll turn around and trigger and start heading south, right at opening bell, right? I'll set my stop loss tight as soon as I do opening bell. Tap out early.
Yep.
Because the earlier you tap out, the less money you lose.
Stop loss.
And then I don't just rush back in and start buying. Oh, let me DCA. That's how we lose money. No, let me see how fast and how far this thing is falling. And let me pull up a chart and see where the volume starts to pick back up, where you see support and it starts to go back up. And then that's when I start to buy and then go into profit. And then raising my stop loss as I go into profit. Now, you're in profit, and that stop loss is just protecting your gains, okay? So hopefully this video has helped you guys. Yes, it will be time-stamped, and this is a whole video by itself, but I had to talk about the Jackson Hole. Anything in closing?
No, we're here at Earn Your Leisure. We're hanging out, meeting a lot of the followers, a lot of the
Yes.
subscribers, having a great time.
Yes.
Thanks, Larry, for having me in this video today.
Yep.
Same here.
All
Live,
right.
love, laugh, and learn. See you in the next one.
So what is the piece? Proper preparation
prevents poor
for performance.
performance. I see you in the
We'll see you in the next one. Peace.
Peace and blessings.